As a trader, you need to understand that the game of trading requires you to align probabilities and percentages in your favor. Not only is this true in trading, but also in business and in life. Nothing is for certain and everything is a risk. If you're securing a supplier to ship your products, you're aligning the probabilities in your favor by making sure that the supplier is credible, that they're verified, and that you've seen the samples that they sent you before purchasing in bulk. That way you avoid getting scammed or duped with low quality products. When you're driving a car, you align the probabilities in your favor by putting on a seatbelt, following the traffic rules, also that you can avoid getting into a crash and getting hurt, right? So the same concept applies in trading, and so the question now remains, how do you align the probabilities in your favor while trading? How do you obtain edge in your trading? Well, in this video, I'll be explaining all of that. I'll be discussing the areas of Confluence that you should look out for and all of its general concepts, and then the best trades to have taken today, including the one I took. I took this trade because I saw 6 key elements that gave me the confidence to take this trade and therefore provided me edge in my favor. You don't see many YouTube channels explain the concept and then practice in real time for you the exact concepts, right? I made $660 based on these key concepts that I'm about to share with you. And if you watch my other videos, I'm following the same outline. Other channels just explain to you the theory, but I'll be the one discussing all the nuances in detail and showing you live examples because I actually practice what I preach. Quickly make sure to subscribe to the channel and let's jump right in. Alright, so let's get into the concept explanation. So remember when I was talking about aligning the probabilities and percentages in your favor, right? And so the question is, why was I able to do that? Or how was I able to do that, right? Comes down to finding an area of confluence. It's basically a list of elements and key factors that give you confidence in taking a trade, right? The more factors there are present in that one scenario, the higher probability it is that your trade will work out and at the end make you some money, right? So let's just explain the 6 factors that I saw with the trade that I took. And before showing you the chart, I'm just going to quickly explain each of the key factors, right? So price action. What is price action? That is simply how a stock is moving and what the chart is telling you, right? You look at the chart to see how the stock is moving, and you're literally looking at how the price is acting, right? And how do you look at how the price is acting? By looking at the candle bars. So you're analyzing the candle bars, right? And you're looking at specific wicks, where the candle bar closed, on different time frames. That's price action, okay? And obviously, mastering this skill takes time, comes with experience and practice, just looking at candle bars for hours and hours. And, that's with any endeavor in life, right? Excellence comes with practice, comes with work ethic. And so, yeah, that's the first element. The second element is pullbacks, right? So what is a pullback? It's simply when a stock is trending towards one way or the other, either to the upside or downside, and it gives you a slight pause. It's like a rest period, a pullback, where it intends to go in the, continuing direction, but it doesn't just go straight up vertically or straight down vertically, right? It gives us rest periods, a pause, a retracement. So that's what a pullback is, right? And so what do you want to do? You don't want to get in right when it's shooting up because it's likely to pull back and you're going to have to sit either in a drawdown or a reversal, which will make you lose money. So what you want to do is after the initial move, get in for a pullback, get in at the rest period so that, you're in the right time for the stock to make its other move or subsequent move, and you can profit from that, right? So that's a pullback. That's the second element. The third element is relative strength, right? So relative strength is just how strong this particular stock that you're looking at is compared to the market, right? So you need to have both charts up, the stock you're looking at and the market. What most traders look at, including myself, is the SPY or the ES. That's the S&P 500 or the S&P 500 futures, and then the NASDAQ. So the QQQ, that's the ETF, or /NQ would be the NASDAQ futures, right? So you're looking at both of them and you're seeing how the stock is moving relative to the market, right? While the market is chopping or is going downward, is the stock going upward? Is the stock following the market, right? So what is it doing relative to the market? That is relative strength. The next one is supply demand levels, right? So before you take a trade, when you open your computer, you should map out important key supply demand levels, support and resistance lines, and these are levels that are psychologically important as traders, right? We want to see how price reacts at those levels, and so keeping those in mind is especially important in aligning the probabilities in your favor. Second to last is time frame analysis. So if you don't know, there's different charts or there's different time frames with different charts, right? So you can look at the 2-minute chart, the 5-minute chart, the 1-hour chart. And so if they're all aligning with your overall thesis, then it's giving you an edge in that whether someone's looking at the 1-hour chart or the 5-minute chart, if everyone's looking at the same thing and taking the same trade with the same idea, that's an edge, right? It aligns the probabilities in your favor. So that's time frame analysis or time frame alignment. And last but not least is volume. So what is the volume doing at a specific period in time, right? In this case, what is it doing in a pullback? Is it slowing down and then on the move up, giving an increased surge of volume? What is the volume doing at that specific period in time? And so when you're able to look at all these key elements, all these key factors before taking a trade, and they're all aligning with one another, I mean, that's a huge advantage, right? That's a huge incentive for you to take the trade because it gives you more confidence. Once you define your risk limit, your stop loss, you shouldn't be mad at the fact that you lose. I mean, when you take this kind of trade, it requires patience, it requires discipline. And so, this is what you practice for and wait for. And in this scenario, if you have all 6 of this is an A+ setup, right? Why wouldn't you take this, right? And so that's exactly what I saw today, which is why I took the trade and made around $660. And so yeah, let's move on to the next segment. The concept behind one trade to take is that I try to take one great trade every single day as a part-time trader. I look for one A+ setup, and if I lose on it, I'm happy. If I win, I'm happy. To be honest, I focus more on the strategy and the process than the money. Let's start off with the stock and video. So as we look at the stock, we're gonna explain each concept, simply so that you can understand it clearly, and hopefully you can, spot any area of confluence when taking your trades, right? And so if I didn't explain area of confluence clearly, that's just when there are multiple indicators, multiple signs, multiple reasons that give you confidence and an incentive to take a trade, right? Why does it give you confidence? Because all of the probabilities and percentages are in your favor. It's telling you to take that trade, right? Yeah, it's not 100% certain, but it's more certain than not. Or if anything, has 0 factors, right? So that's an area of confluence, right? It's just an area on the chart where different indicators are in alignment, in confluence. So looking at the stock and video, you can see that I have 3 different time frames pulled up. I have the 1 hour on the left side, the 5-minute on the middle, and the 2-minute on the right side, right? And so let's start off with our first key element, our first key factor, price action and candle bar analysis, right? Actually, I'm going to start off with supply demand levels because that's the first thing you should have mapped out from the gate, as soon as you open your chart. So you can see that I have these 2 key levels right here, these 2 supply demand zones. It's at 890 and 907, right? So these are my key levels. And so you want to see what it does, what the price action does at these key levels, right? So we've noted that. Now let's take a look at the price action. So looking at the candle bar analysis, what does it do in the first couple minutes, right? Gives us a huge rejection bar with a bearish wick, showing that it wants to reject that level, right? So it rejects this level, turns it into a supply level, and it's going downward, right? But then what does it do? It quickly reclaims this, right? And then now, if you look at the 5-minute chart, it's now above it. So now it has become a demand level. It turned it from, a resistance now to support, this 890 level. So now it being above it is showing bullish strength, upward momentum. For the next 5 minutes, it gives us another move upward. And then what does it do, right? It gives us a pullback, right? With the pullback, now that's 3 elements, right? We got supply demand levels, price action, and the pullback. So when the stock is pulling back at this level, it's pulling back to this EMA indicator. That could have been another, reason or indicator in which you could take a trade. It's pulling back to this EMA, right? This 9 EMA, and it's not, it's not falling back down, right? It's just a slight pause, a slight rest period in which, I'm thinking it's going to make another move, which it obviously does. And then we can also take a look at the volume, right? So when you look at the volume of this pullback, it should be relatively light in comparison to the previous move and then in comparison to the next subsequent move, right? So if you look at the volume here, it's lower compared to here and lower compared to here. So it's a low volume pullback, which we like. You could look at the next move and see the volume there, and you can see that the volume increased, heavily on the subsequent move, right? And we want to see that, right? On a surge, we want to see increased volume, And so now that's another key element that I mentioned, right? The volume and the pullback and the volume on the subsequent moves, right? So we went over supply demand levels, the pullback, price action, and the volume, right? And then pretty self-explanatory, but if you look at the time frame analysis or time frame alignment, on a 5 minute is the same thing as a 2 minute, and it's the same thing on the 1 hour, right? You can see that the key levels on the 1 hour is at A90, and what's the stock doing on a 2 and a 5 minute, right? While it's pulling back, you can see that on the 5 minute chart, it's basically just a small doji candle, a small rest candle that's bullish, it's green. And so we have time frame alignment right here, right? Finally, our relative strength, right? So what is relative strength? Relative strength is just how relatively strong is the stock compared to the market. So if we look at the SPY or the S&P 500 ETF, we can see that for the first 35 minutes or so, the market is just chopping sideways, right? It's literally between 515.50 and 514, right? It's within this $1.50 range. So while it's chopping within this range, what did Nvidia do the first 35 minutes, right? Nvidia just shot straight up. So it's relatively strong compared to the market, right? Once you see that the market is chopping like this, but Nvidia is just going straight up, it's relatively strong. So that's another key factor in which it aligns your probabilities in your favor. It gives you an edge. And in return, it gives you more confidence to take a trade, more of an incentive to take the trade, right? So hopefully you can see why I took the trade, why I was confident in the trade. I would set my stop loss. So I entered right here. After that rest period, I entered right here, and I set my stop loss right here. Just because you have all this confidence doesn't mean that your trade is 100% going to work, right? You still need to enter a trade with a stop loss in mind, right? So my stop loss will be, below these candles right here, and, gave me a relatively easy trade and peace of mind. On the first surge up, I took partial profits out, and then on the next surge up, I took some more out, and then on the first sign of weakness, I took the rest of my position out, right? So overall, I made $660. And then what does it do, right? It peaks out. This is why you need to scalp and take your profits immediately when the stock gives you your moves, right? And then you can see right here, it gives us a bear flag or descending triangle or ascending triangle, whatever you guys like to call it. I just look at everything like a bull and bear flag. They're all flags, whether it's a triangle or a channel. It's just a bull or bear flag. Don't make it so complicated, And then, it gives us another bear flag right here, and you could have taken an entry right here. So there are multiple setups and opportunities every day, right? Let's take a look at SMCI. If we take a look at SMCI, the same thing happened here, right? We got our key levels at A97 and 936. Gives us a huge bullish wick candle with buyers driving up the price from that level, showing strength. We see our pullback, our rest period right here to the 9 EMA. And what you would have done is taken the entry right here, set your stop loss right here at 910. And on the first surge up, take some profits. On the next surge up, take your profits. And then, when it falls back down to your adjusted stop loss, you would take the majority of position out, right? And so now, it's the same concept here. We have our 2-minute, our 5-minute, and the 1-hour time frames. The time frame is in alignment. If you look at the volume, you see on this, on this pullback is very low volume, right? But on the surge up right here, right, gives us huge volume, right? On this 5-minute chart, in this candle, huge volume, huge surge in volume, and increased volume. What is volume, right? It's just the number of people that are buying or pushing the stock up, right? So the higher the volume, the more people that are buying the stock, right? And so with all of these key factors, once again, it provides us an area of confluence with multiple indicators and reasons for us to take a trade. And so hopefully through this video, if you're new, even if you're pretty amateur or advanced in your trading, this should be pretty helpful because, these are time-tested principles that, happen every day in the market. It's just your job to stay patient and, map out the key levels and stay disciplined and just waiting, don't just chase the first move up or down. You got to wait for the setup, right? And obviously all of this takes practice. It's not just a one-day thing. And so, yeah, just 2 trades. I just want to show you guys 2 trades that happened today on Monday, with all of these key factors in alignment that gave you a high probability and an edge in making money today, right? And one more thing we forgot was a time frame alignment, right? So while the market is chopping around, is chopping in this range, it's consolidating, right, within this range, what is SMCI doing, right? It's pretty bullish. The buyers are pushing the stock up, and for the first 35 minutes or so, it's gone from one key level to the other key level, right? It made a $30, $40 move while the market was chopping within a $1.50 range. So the time frame alignment is there, along with all the other elements that I've mentioned. And so, yeah, I didn't want to forget to mention the time frame alignment with this. That ends the video. Hopefully you gained some insight as to how to align the probabilities and the percentages in your favor while trading. That way you can avoid losing your hard-earned money and start becoming profitable consistently. Don't forget to hit the like button and turn on the notification bell for my other videos. Comment anything you want down below. Trust me, I read them, and I'm wishing you many more Benjis in the near future. Take care.